most of the things they were talking about, I had no clue because they weren't teaching it in school. And it was so frustrating because when I went back home, I got all excited. I told my mom, here's the game plan. She says, what? What is all of that? You don't know what you're talking about. Go change your diaper, go clean your room, right? But thanks to a Primerica representative, and we have the best one here in town, Nicole, I was able to understand my finances, set a plan, and make sure that not only I protected myself, I protected my family, and that's what's important to me. Thanks to Primerica and all the great work that they do in financial education, we're here today. So, thank you again, Nicole. Let's give a round of applause for Nicole. All right, so the next speaker we have, all the way from Pennsylvania, where the best Philly cheesesteaks in the world, working in real estate for over 15 years. He knows what he's talking about when it comes to home loans, real estate market, specifically in Brevard. If you want to know what's going on in Brevard, this is the guy you want to talk to. And another fun fact about Gene, I love this guy. Gene loves swimming and horseback riding. It doesn't look like it, but he does. That's probably where you get all your muscles from, huh? I love it. All right, let's welcome Gene.
Thank you. Good evening, everyone. First off, I'd like to thank everyone for coming tonight. My name is Eugene Thorpe. My wife and I are she's the only broker of the mortgage project, which is next door. You guys are at our nonprofit, which is called the Ministree project. And really what we're trying to do with the nonprofit is to help the community learn the importance of home ownership. Most of our businesses are started by the equity that is built up in our homes. So home ownership is very important to us, and we love helping people. So if you guys have any questions, our information is located on the inside of the pamphlet there. Now what I want to do is go over probably some of the most frequently asked questions that we get in real estate. I'm a realtor and I'm a broker, a mortgage broker. So I kind of see both sides, but tonight I want to deal specifically with the real estate side and just go over some questions that they ask us a lot. And we can do a Q&A, or if you guys haven't, just raise your hand and we'll address the question. One of the things about the people in the room tonight, anything you need referring to home ownership or financing, it's right here tonight. So everything you need is right here. And I want to thank Brian and Nicole for using our venue tonight. This is for the community, and it's for nights like tonight where we can bring people in and teach them things about home ownership. Okay? So where I want to start, and let me just put my glasses on. And if you look in your pamphlet, everyone has one of these or should have one of these. Take that one there. Is there one in there?
No, but there might be one.
Here, you can have mine. I'll use the board. Okay. So what we want to do is just tear down some myths about real estate and homeowner. And people say all kind of things from, I saw my credit score on Credit Karma, which is not accurate. They want to do appraisals on Zillow, which is not what it's really used for. So all of these obstacles we have to overcome when we're dealing with the client. So the first thing I want to start with, while applying to multiple lenders, does that hurt your credit? And no, it does not, okay? You have 14 to 45 days to apply for as many mortgages as you want. You apply for a mortgage with the different types of lenders, that's online banks, credit unions, or whatever, and you actually compare. So that allows you to compare the different rates, the different closing costs, and so forth. So you want to probably apply to multiple lenders just to see who's going to give you the best rate, okay? process is you have to get pre-approved, or part of the buying process, you have to get pre-approved. And you do that by having a mortgage broker or lending company take a look at your finances, your pay stubs, your tax returns. So if you're planning on doing anything as far as financing or purchasing a home, you want to make sure your fingertips are near your pay stubs and your tax returns. And really, as far as employment, they're looking for consistent employment for approximately 2 years. So if there's any gaps, whether you were laid off or whatever the case may be, you want to, if you're filling out an application, you want to make sure that you cover that gap, because they're going to ask once it gets in the underwriting. As far as home buyers, once you have a home, some of the things that you want to look at is the foundation issues, roof repairs, water damage, heating and AC, electrical issues, termite damage, plumbing issues. We're here in Florida. One of the biggest problems we have is, well, besides the roof, it's probably, I want to say, plumbing issues. A lot of the piping in this area is it's galvanized steel or whatever, but it's rotting out, so it needs to be replaced with probably some type of PVC. So what we suggest to home buyers, especially in this area, is to get a plumbing inspection. Okay? Never pass up a homeowner's inspection. Even if it says as is, do yourself a favor and get a home inspection, because that's going to let you know all the flaws that is in that particular property. If you want to purchase the property anyway with the flaws, then now at least you can make a good decision. What does a low interest rate mean for home buyers? Less paid in interest over time, a bigger home buying budget, and lower monthly mortgage rate. The lower the interest rate, the lower the monthly payment is going to be. And it's really that simple. That's why you shop, okay? And then, you also have to include things like HOA, taxes, property taxes, insurance, and so forth. So when you're doing a budget for a home, you want to make sure that you include those things. Which lender is right for you? Whoever you feel comfortable with.
Gene Thorpe.
Good job. I'll leave you for that. Whoever you feel comfortable with, whether you're going to, a bank, you're going to a credit union, you're going one of the online lenders like Rocket Mortgage, whatever you feel comfortable with, and whoever responds to you and is going to help walk you through the language and the process of buying that home. Because some people expect for you to know some things that you may not know. They may use acronyms that are used in the industry that you have no idea what they're talking about. You say APR, people don't know. Some people do, most people don't. So you want to find a mortgage broker that's going to take the time out and explain to you what's going on, what your payment is, and so forth. Who does what during the home buying process? You. As the buyer, you choose the lender and you choose the real estate agent. You choose your homeowner's insurance and your flood insurance, and you schedule the utilities. The lender, we order the appraisal, do the title search, make sure you have the insurance, and you schedule a closing with the title company or attorney. Then again, we just talked about the home inspection, and you just really should pass the home inspection up. Working with the realtor, here's what you'll sign: a buyer's agreement, okay? And that simply outlines the realtor's duties and obligations to the buyer. And here are the most two common. With the non-exclusive right to represent, the buyer may hire more than one realtor. The buyer may purchase a property through another realtor as long as the property is not a home introduced by the first realtor. The exclusive right to represent, the buyer has agreed to work exclusively with the realtor, meaning that you're just going to work with me. And this is what agreement you're signing, that you're not going to go somewhere else and sign up with another realtor. In terms termination. Normally, you can terminate your relationship with the realtor pretty much any time before an offer is actually made with no consequences. But if I don't feel comfortable working with someone, if they want me to do something or lie or just do something that I don't feel comfortable with, I won't work with them anyway, because it's not worth losing my license, and then you just don't wanna do that, because then you get caught up and normally it comes back to haunt you. So it's best to do things the right way the first time. How to increase your chances of gaining an accepted offer. In real estate, cash is king. So we may have one house, we may have 3 offers. Of those 3 offers, one may be a cash offer. 9 times out of 10, that seller is gonna take the cash offer because they can close quickly. They don't have to wait until the potential buyer is, getting financed through a bank and all that other stuff that they have to go through. With the cash offer, normally you can close it probably in two weeks. So it's something that if you have it and you're looking to purchase a property, especially down here, we're in a real hot market, and there were times where we would put offers in and cash offer comes and we lose the deal. It happened numerous times, to be quite honest with you. So when you go to make an offer, if you really like the house, you have the cash, make the cash offer. Appraisal, what you should know. An appraisal is simply, it's done by someone that's certified by the state. Here's another thing that I try to tell people, it's not a broker's opinion. In order for the bank to finance you, you have to have an appraisal by a certified appraiser, okay? They're not gonna take anything else. So they're not gonna take the assessment, they're not gonna take what you saw on Zillow. It has to be from a certified appraiser, okay? And normally, I think nowadays, the bank actually chooses one for you. You really just, you pay for it. The bank chooses one for you because they don't want realtors showing favoritism towards any particular appraiser. So it keeps out a lot of the nonsense, but the bank chooses it. We just sit back and wait till we get it and hope it's, what we want it to be in order to do the deal. Let's see. Credit scores. There's 3 credit bureaus: TransUnion, Equifax, Experian, thank you. And you have 3 different scores. Normally the bank will take the middle of the 3 scores. So if you have a 700, 725, and 750, they're gonna do the loan based on the 725, okay? They're gonna take the middle of the 3 scores. Credit, I don't wanna get stuck on credit, but credit in whatever you do is important. So there are credit repair companies out there. If you need one, let me know. I know some people that fix credit. If you are joining one of these Experian websites, Equifax, TransUnion, it's worth it because they really show you accurately what your credit score is. And then you can actually, there's so many different things you can do. There's a cost, I think it's like $29 a month, but it's really pretty accurate as far as what your credit score is. And the higher your credit score, the lower your interest rate, and it's a great way to keep track of what your score is. And 3 types of approvals. You have a pre-qualification, which is really the weakest of them all, and it's just really an estimate, okay? You have a pre-approval. When you have a pre-approval, that means that the bank has your income, they figured it all out, and they're saying, okay, based on what you make, you are pre-approved for $400,000. So now, when you go to the realtor, you want to take that pre-approval, and when you see a house that you like, and we're talking to the owner, we can show them the pre-approval letter showing that our income has been checked and verified, we're ready to go, we just have to pick out a house. So getting a pre-approval is, I say it's mandatory when you're looking for us, because if you're not pre-approved, then I could be wasting my time because you may go to the bank and you may not have enough income for what you wanna buy. And then underwriting is the strongest. Underwriting is king and also in our business because they decide whether they're gonna close on the loan or not. But that's a process, and basically they take all your information, put it together, and they determine whether or not they're gonna approve the loan, and that's pretty much what that does there. And the most common homeowner regrets is the maintenance, more expensive than expected. I talked a little bit about that, property taxes, the AC, gutter cleaning, the maintenance, because people have to understand, when you purchase a home, there's lawn care, taxes, AC is really big down here. My wife and I do a lot of property management, so we have like a team of people, so when we have a problem, we can send those people out to take care of that. But as a homeowner, you don't have an HOA, you have to consider these things. Let's see, and down payment help, where do you get it from? You can get it from HUD, Freddie Mac, and you can search your state and local housing agencies for grants. They have homeowners down payment assistance programs where they will give you a grant to help offset some of your costs for closing, down payment. It's normally for first-time home buyers. And you're also a first-time home buyer. If you purchase a house 3 years ago and you're buying another house 3 years, let's say it's 3 or 4 years later, you can still qualify for first-time home buyer grants and so forth. Okay? Home buyers tip for working with realtors, keep appointments and be on time. So if we set up an appointment for you guys to see a place, you wanna make sure that you're on time. Don't contact the listing agent. We work on commission. Our services are free. Sometimes you may have to sign a buyer's agreement. We're not real big on that. The communication is the key. Just talk to us. It's like, if you don't tell us now, we're eventually gonna find out. So tell us about the bankruptcy, or you're trying to hide that you pay child support or whatever. You have to tell us, because eventually when everything goes into underwriting, all of that stuff is gonna come out, and then it's too late to fix it, as opposed to you telling us early on, and then we can at least address it. Okay, realtors versus mortgage brokers. This is the realtors. We coach and assemble the team, inspection, title company, and sometimes the lender. We find properties for you, and we're experts in the real estate market. I depend a lot on my wife, who I think is the best broker in Brevard County. We're a small company, but I like what we're able to do with our clients because we don't have a sales quota. We'll work with you from, even if you do have bad credit, we're gonna help you go through the steps to become home-worthy. What do the mortgage brokers do? They get you pre-approved, they act on behalf of the client to find the best type of loans, they order appraisals, and they underwrite your loan. Realtors and lenders work hand in hand to make sure that you find your dream home. So it's really important, because we both work on commission, and being a mortgage broker and a realtor, it's really important that we work together. Sometimes if my wife is doing the real estate side, I'm doing the financing side, we work together to make sure that the client information is intact and it's a strong application when we send it to underwriting. Okay, when should you fire your real estate? You may have signed an agreement with the realtor that usually lasts about 6 months. Buyer agents work for free, and this helps protect them. However, if things aren't working out, you can ask the realtor to release you from the agreement simply by notifying them. My thing is, I really don't want to work with someone that doesn't want to work with me. So I would have no problem letting someone out of an agreement, or I would, you don't make a fuss about it. Just not a good fit, maybe you should find someone else, blah, 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 blah. And that's about it. And again, I want to thank everyone for coming out, and thank you for your time.